Good afternoon, ladies and gentlemen, and welcome to this week's trade review. Unfortunately, it's another difficult week for me. I don't know if I'm suffering from a crisis of confidence or what at this point, but the week was started badly with gold, trying to find the bottom in gold as it started to sell off. For somebody who's traditionally a seller of gold and trades gold from the short side and is well regarded for that, it was a surprising change in stance that I'm still trying to rationalise. But again today, as the market sold off, I did expect gold to find support around the 1800 level, but obviously we've gone through that level and are trading in the 1780 range at this time. Mark is asking me there, what's your thoughts? I'll answer the questions as they come in and make sure that I get as many of them answered as I can. What's your thoughts on why the euro dollar remains so high around the 119 mark? The answer, Mark, is I don't really know. I think it's a story of dollar weakness rather than anything else. I don't think it's necessarily the euro that's pushing us that high. You've got this big sell-off in gold. You've got this now gold. You would normally the sell-off in gold. You'd expect to see a bit of a sell-off in the euro, but it's continuing to trade higher. It's up towards about 119.50. I'm out of any euro trades that I had, and I'm surprised by the strength as much as you must be as well, judging on the comment. But you see, with gold trading at the level that we are at 1782, I would have expected the euro to be weaker, but I think what we're seeing is just general dollar weakness across the board. Sterling is obviously a slightly different animal at the moment with Brexit talks ongoing and things there, but sterling is trading at 133.5 after being up towards 134 this morning, and the euro dollar for me, as I imagine with you, is surprisingly holding firm around this 119.50. Level. I mean, if we just look at gold, because it's the one that's caused me most pain over the course of the week, so I'll just take this down a little bit so that we can get back to Monday. Probably just see which chart's gonna. So here we see on the we've I mean, if you sorry, I've got the. Let me just see if I can get rid of the one-click trading whilst we're there. So you can see with gold we've had some really significant movements. I'll just put these in three tranches really. We've got the sell-off from just below, or it's probably, if let me go back one more, let's look on the 4-hourly chart. No, so that's pretty much it. So we've had a couple of significant sell-offs. So from 1964 all the way down to about 1861 before a recovery, and then the sell-off this week has come in two stages. Obviously Monday, or I think this is Monday, and then again what we're seeing today, and we've been down as low as about 1775 and starting to find a little bit of support. But the moves have been fairly spectacular. This was the move, the first move, but the move on Monday caught me out, as did the move today. Sorry, this was the move on Monday. And then we've had a consistent selling off and significant movement to the downside, as I said, touching off that 1875 level. But it's and I've been on the wrong side of that both Monday and again today. The only saving grace, if there is one, I suppose, has been a few trades in the Dow that we've done, and also for the live trading session this week, a very quick return in the Dow. And I was just going to look at the Dow today in relation to the opening bell. So we're highlighting here about 2:30 this afternoon. You would have sold. Now I sold the Dow early, and as I've mentioned a few times over the last couple of weeks, especially when we're doing the live trading session, one of the key the key questions you have to answer is when you enter the trade. So you can see earlier we traded up to about 29.19, 29.20. I was short at 29.19, which was about the time of the opening bell. And you can see we've traded off. We didn't trade off quite as aggressively as I would have liked. This is the second or the first trade that I put on earlier, and we're coming close to an exit level on that, hopefully shortly. But again, with that Dow trade, it would have worked reasonably well. You could have taken 25 to 35 pips out of the trade in fairly quick order before, again, then we've seen that rally. Now, always be aware and conscious of this rally, which sometimes occurs during that 5-minute period, and then we've had a fairly significant sell-off from there. So again, the 30,000 level in the Dow, certainly from a cash perspective, remains a barrier. From the futures perspective, it remains a more significant barrier. When we look at the 1 hourly chart, you can see this bit of trade in there above 30,100. Most of that was during the Asian trading period, so late at night. And I would give less relevance to that movement. It would have just been, potentially a couple of stops that took the market there, and also a number of, a certain amount of trading in line with what the Nikkei and the Hang Seng were doing in relation to the first time that they were trading after the Dow closing above 30,000. So I wouldn't give as much credibility to it. So with the Dow, I only have the one trade open. I am short the Dow at the moment, hoping that we'll see some form of a correction this afternoon. Obviously, we've got a weekend coming up. Not that there's too much over the weekend that I think would naturally give us concern as to what the market is going to do, but I would certainly prefer to be short up in this area. We see, I know Bitcoin has enjoyed some fairly fantastic increases over the last few weeks, but Bitcoin has sold off quite aggressively as well in the last 24 to 36 hours, and is back down around 16,700 after touching off 20,000 earlier in the week. In terms of the results, and I wince when I open this, unfortunately, it's another 4-digit loss for me this week. A couple of winning weeks back to back, but you can see on Monday the gold, and I was expecting the sell-off to stop quite aggressively. It didn't, and you can see there I was short at 1856, 1848, 1842, and ran those stops far too long, especially the first one of those, and expecting the market to recover. It didn't. I think we continued to sell off down to about 1805. And I took a fairly significant hit on that, so I just moved the camera around. Just realised you didn't have my ugly picture so much in focus. Tuesday, a couple of trades in the Dow. Again, probably on the maximum of my stop limit, 200 pips on each of those. But they were Dow trades. As we rallied up, I was expecting the move above 30,000. To curtail a little bit quicker than it did. Unfortunately, we went up to 30,000 and a half, maybe a little bit more than that, before we started to trade off. Wednesday and Thursday were much kinder days to me. Thursday, obviously, Thanksgiving, so not too many trades on that day. And then today, as you can see, with the 4 trades in gold, whilst the stops have been quicker, the move was fairly quick, down from about 1805 down to about 1785. There were a couple of pauses within it, but it was a quick move. And like I say, we're currently not back at any of those levels that I stopped at, but we're getting back towards about 1782, 83 at this particular point. So not a good week, unfortunately. Gold being the main damage throughout the course of the week. If you look at gold on its own, 1,193 pips to the downside, fairly negligible with everything else, with the Dow and the DAX, 26 pips on the down on the DAX, 52 pips on the Dow. There's no consolation in that. The intention is to make money every single week, and whilst I know that's not possible, when you look back at the gold trades in particular, and the stops that were allowed to run, the fact that on gold itself, from somebody who normally trades from the short side, I've managed to lose 1,100 pips in a falling market in gold. That's not something that I accept too readily or easily, because I think when I look back over the last number of weeks and and the comments that I will have made in here in relation to gold, why I wasn't short, I really do not know. Just back to the markets as they are at the moment. So the Dow still trading off around 29,860. It is finding a bit of support. There is still buyers out there who are coming into the market. I don't think that there is enough in the market, certainly not as we come into the weekend, to propel the market through 30,000 and to hold that level. Obviously there are some positives ongoing. The vaccine continues to be, or developments around the vaccine continue to be the most positive thing in the market at the moment. Obviously there is this Biden transition to the White House that has cleared a few hurdles during the course of the week, but I think there have been a few negatives in relation to the vaccine, in that there are new or more testing is required to confirm the efficacy of the Oxford AstraZeneca drug trials, but Trump has announced that the first set of vaccines should be available to certain people within the United States during the month of December, so that's all very, very positive. You would expect some window dressing towards the end of the year. Last year I think there was some substantial window dressing, and I think from my own perspective I'm just hoping that I get back in tune with the markets sooner rather than later. I think the experience over the last week or so would be that whilst I'm reluctant to leave gold alone, I don't think gold is a sell at these levels. If I was going to be thinking about gold, I would be buying at this particular point. As you can see, when we look back at gold and you see the significant moves that we've seen. So we've got 1964 here, which was, we were trading there on the 6th of November. Is that right? Yeah, on the 6th of November. We're now $180 lower. We were currently trading, we're $180 lower than we were on the 6th of November. So we're talking about a period of less than 3 weeks and a significant movement to the downside. I think that there has to be, for those people who've been short in this period, there has to be a certain amount of profit taken. I think you probably saw some of that in this particular period and again here during the course of this week. But I think there is potential for the market to correct. If we do continue to see significant strength in the Dow, there is a chance that we'll continue to see the rotation out of gold continuing. I personally believe that we are more likely to see a correction in the Dow down from the current levels that we see, possibly back down towards the 29,500, 29 or 29,600 certainly. I'd like to think that we'll see that move during the course of today, or certainly heading towards the weekend, and continuing early next week. I think the lockdowns continue around Europe. Certainly the situation here in Ireland is improving. I think in the UK there are new tiers going into effect next week, so the coronavirus pandemic appears, and it's very superficial, I suppose, appears to be being brought back under control, but the promise of the vaccine is the thing that everybody is focusing on. I think more positive results are going to have some positive effect to the market. Stimulus, if that manages to come through in the next couple of weeks, will have a positive impact as well. But as I've mentioned a number of times already, it's been a negative week for me, and I certainly will be taking some time at the weekend to look back over the trades and try to refocus and work out what I'm going to do from this point forward. A break is one option. I don't think it's one that I take too kindly or too easily. I think it's very easy to get out of tune as well. But maybe, when I look back over the trading, and just to give you some insight into my way of thinking at the moment, let's move this up. So you can see that the early trades, so let's just look, with the exception of today, although they're not quite as damaging first thing today. So if we look at the first 3 days of the week, we'll just highlight those in blue. So you can see the trades were largely profitable. Even if we go down to the line that we have here, predominantly profitable in this period. So the early morning trades are doing very well, bar today, although the gold trades were this afternoon. So focusing on those, the first 6 or 7 trades during the course of the day, I think is one way to approach it. The Dow trade or the Dow trades in the early afternoon sessions are profitable as well. I think every single day this week, the trade around the opening bell has always returned. So just focusing on those for a period of time, I think, is the way that I'm probably going to go. I have definitely been overexposed again on Monday, again today, and trying to eradicate some of that will be my focus going forward. We're pretty much out of time. I don't see a lot of questions coming through. That may be an example of the week that I've had, which is fair enough. But if you do have any questions, please email me. I have no problem answering your emails over the course of the weekend. I know that I owe a couple of people responses, which will be forthcoming over the weekend as well. So have a good weekend. Thank you very much for joining me, and we'll speak again during the course of the week.